Daniel, welcome to this episode of the Australian Business Podcast. A few seconds late. We'll see if
No.
the logo changes while we're recording live.
Yeah, thank you, Owen. I'll jump on the finance one if you want me to. No, there we go.
There we are. We've got the new logo. The Australian Business Podcast for anyone that's watching on YouTube. We are answering questions as we do like to do every Friday at midday. We do say midday, but I don't think we've been on time once. So
It's a loose midday.
it's midday somewhere. But we've had some questions sent in, and Jordan's not with us today. So we're you've got the number 2 and number 3 in order of greatness. So Daniel's number 2, and I'm a distant third.
I was going to say, I wonder who's number 2.
It's definitely not me. So we're going to be filling in for Jordan this week, but we've got some questions on buying a business, which they seem wrapped with the service that you have done at Grayspace. And then we've got a business checklist for someone that is new. But maybe before we get to all of those things, mate, what have you been working on? How's your week been?
It's been good. It's been busy. We're still sort of transitioning sort of this new key employee, which has been great. Jordan's watching live, which is great. At least he's doing some. So it's been busy. It's been good. We've had a lot of inquiries this week, actually. Sort of new engagements. I think people are leading into seeing this last sort of 4 weeks of the year. I'm going to finally get to those things I've been wanting to tick off all year, and that might be, transitioning accountants, changing bookkeepers, and starting to plan for a big, hopefully, calendar year of 2024. January is a big month of change, but I think it generally starts in December.
Yeah. Jordan, send through your questions in the chat. We know you have heaps of tax questions. Daniel, ask the really technical ones. Yeah, but it's like that, isn't it? End of year. There's no other reason other than it's Christmas. People get a chance to sit down and think about what they're going to do in 2024. It's not the end of the year yet, but just thinking of this year versus, say, years gone by, would you say businesses that are coming to you are generally in better shape, worse shape, same, like anything that you're noticing?
I think there's a lot more people giving it a crack this year. We're getting a lot more startups coming through, people that have finally almost taken that leap into self-employment. I think we're starting to see a big trend of people wanting to know more and do more. Traditionally, sort of when you look at sort of accounting firms, a lot of the clients are just like, you send them the best, they get their bill, they don't really want to talk, this, that. It's sort of just part of running a business. Now people are really valuing sort of the knowledge, the ability to grow. They want to actually know more, to be more. I think it's actually fantastic to see the sort of, I think for me, it's the want. It's the want to know more. I want to do better. Whereas traditionally it's just like, yeah, whatever. I do what I do. I get what I get.
We were saying before, we were just chatting because Kate was recording right for us. Thanks, Kate. We were just chatting off air about how people that are coming through the podcast and becoming clients of Grayspace and how they're kind of, you were saying, take your words out of your mouth, that they're kind of like warming up to like us as kind of a trio and starting to reach out. Like I know more and more people are signing up for the coaching and that sort of stuff and going on the wait list and all that. But yeah, it's really good to see. Like we're getting a lot of engagement, and hopefully, I don't think we've spoken about this, but hopefully next year we'll be on the road again. And no matter where you are in Australia, we should be able to catch up because we're going to go. Hopefully next time though, Daniel, you flew to Perth and home the same day because Jordan had a Bucks party.
That was a terrible decision.
Yeah,
I still feel like I'm recovering from that trip.
The people in Perth are absolutely amazing human beings, and it's so good to get over there. So hopefully we can do that again next year, and all up and down the East Coast as well. So hopefully folks can come and meet us, and hopefully we can have like some business focused sessions. That's where we met Alexander, who's been on the podcast a bit lately. So
great.
Yeah, so hopefully we can do a bit more of that. I did actually get some feedback from Jordan about a week or so ago. And I thank you to everyone that's on Twitter or wherever you interact with us and gave us some business book suggestions. So Jordan gave me some. this is not a business book, but just like it's a general FYI book. Clear Thinking by Shane Parrish. It's a really good book about decision making and so on. Where are some of the more? Jordan gave me this one.
That's a good book.
Blue Ocean Strategy. Yeah. I can't remember if he said to read that second or not, but that's a really good book. I did order another copy of E-Myth, which is up the back there. I didn't grab it down. E-Myth Revisited, which is a great book, How to Win Friends and Influence People. Then there was this book as well, Scaling Up, for folks as well. I think this is more of like I haven't got into it yet. I don't know. Have you read this, Daniel?
It's actually sitting on the coffee table right outside in our office. Jordan rates it, but because I'm not I don't want to say strong reader because it means I can't read, but because I don't read that often, it's more of like a textbook. So it's very informative, less sort of
storytelling.
Yeah.
So basically, probably the 4 books. I'm taking Jordan's words out of his mouth now. He's not even here, and I've read most of them. But 4 books that I'd go with is Traction, E-Myth Revisited, and based on your recommendations, Scaling Up and Blue Ocean Strategy. Fantastic books.
Yeah.
There are heaps of others for marketing and such. For any coaches and managers, this book, The Coaching Habit, that's a good one. So heaps of books for reading over summer, which people can find out. I'll put a few links in the show notes. But, mate, we're going to talk about these 2 questions that got sent in. And the first one, I'm just going to hand it over to you because this first one is really interesting from Crafty Critter, which was, I won't go into huge detail, but I'm buying a business with a loyalty program in place. So we've had a lot of questions about buying a business. We've actually talked, for everyone listening and who tunes in every week, we are going to put together maybe later this year or early next year a business buying Bible kind of thing where it's just like a checklist and a guide to buying a business. So if you want to know that, jump on the Grayspace mailing list or just subscribe to the podcast because we'll share it in the next few months. But they say, I'm buying a business with a loyalty program in place and there is nearly $17,000 worth of outstanding loyalty points. I would like to honor these from a customer perspective. It shouldn't matter if the business changes hands, which I'd probably agree with.
Yeah.
But what options are you aware of that we could consider for handling this liability? We say, love the podcast and the team at Grayspace have been amazing to work with. Thank you, Crafty Critter. That is not a planted question, but maybe it may as well be. That's a fantastic endorsement. So what do you think, Daniel?
Yeah, so I've actually approached this question with our now client, but I'm going to sort of talk more about just the issue itself rather than the full context because I am aware of the full context.
Yep.
So obviously these loyalty programs are very popular, right? You jump on, you get free stuff.
Yep.
Once you spend sort of X amount. And I agree with the comment that it should stand, that the customer shouldn't be sort of disadvantaged by a change of ownership or a change of management.
Which they can be because sometimes there's terms and conditions, right?
Of course. So I actually agree in order to retain sort of face value and to retain sort of the loyalty of these people, I would keep it. The next part of that question, sort of, how do you go about it?
Right? Because if you're buying a business and there's like this stuff here, do you have to adjust for that?
Yes and no, in my opinion. I don't think you need to adjust for it if it's been disclosed from the beginning. If at the very beginning it's been factored into the balance sheet, we know that liability exists, it has been completely disclosed from the beginning with the purchase price built in with that notion, then no, I don't think there needs to be any action that needs to be taken at that point in time. It's whether you think the price of the business is fair. I think it's a problem when it's not disclosed, but it's discovered at a later date, whether it's, negotiating the contract, whether it's going back and forth with the terms and conditions, whether what stock to buy, what stock not to buy. That's my issue. My issue is disclosure. I think if it hasn't been disclosed, which I know for a fact in this scenario, it was not disclosed.
Okay.
Initially, it was not disclosed during due diligence, and it's almost impossible to find out unless it's sort of spoken about or said. It's almost impossible to know about. So,
just to confirm what this might be, because I don't know the context. Could this be like, say, for example, you go to a cafe and they have those loyalty cards where you have a free coffee after 6 coffees or something like that?
Spot on. That's exactly what it is. And then
And I imagine that a lot of them don't account for that, because how would you know?
well, you'd only know the accountant will only know if we're told, and we're told the value as well. So we'd be able to easily record it, but we need to know about it, and unless we're told. But at the end of the day, like people also need to understand that when you're selling a business,
Local cafe. I'm holding up the
Yeah.
stamps that I got this morning
yeah,
for the coffees.
when you're selling a business, you got to prepare your accounts to be selling a business.
True.
Right? It's not
Built
like
to sell,
reporting to
right?
the ATO. Yeah, you need to build to sell. Like you've obviously exiting for a reason. Like it's not like putting your hands up and go, oh, I'm done with this. I'm leaving now. I'm just going to sell it as is. It's like no. You need to prepare things. You need to get information together. You need to be able to start doing stock takes if you haven't done stock takes before. Like this is key information that buyers need in order to value your business.
Mm.
So it's not as simple as I'm just going to here. It is what it is. Here's my tax accounts. It's like okay, well, cool. But
Wouldn't it be nice though to buy a business from someone that doesn't take the time to do that?
absolutely.
Like if you could go in and you could figure out what's going on, assume that you could do that.
Yep.
And this is the wonderful thing about private markets, about private businesses, is a lot of the times the people who are in charge of those businesses are not in any way organized
No.
or have things going on in their life where they're not able to run it to its full potential.
Yeah, and they don't have the people around them to guide them into the right area. So it's not like they've got like either call it advisors, mentors, or people around them to say, "Hey, I want to sell." It's like, "All right, cool. Are you primed to sell? Let's get ready.
Yeah. Yeah.
Let's get ready. Let's utilize everything we have." At this point in time, it's like if you're running debatable expenses through the profit and loss, let's wait 6 months. Let's wait them out. Let's wait them out. Let's start inflating this. Let's getting a true profit to maximize your value.
Are you saying like if, say, for example, someone's using, and a lot of business owners do this, they're using the old my cash, their cash kind of thing, like don't know which one the business bank balance is, don't know which one, all that sort of stuff. And then
listen, Officeworks comes through. It could be kid supplies.
Back to school sale.
how are we supposed to know? We don't get every single receipt. Not if especially for the little stuff. You're talking about thousands of transactions for businesses around the year. If an accountant tells you to get a receipt for every single line item, they're lying to you. It's not possible.
Yeah.
It doesn't make sense. So at that point in time, your prime sells like, okay, cool. Well, I'll keep my personal expenses to the side. I'll put them aside. Let's create value. Let's get a true profit. Let's start recording all our assets. Let's start recording all our liabilities and make it a sellable product so that a buyer can come in. And I can guarantee you're probably going to get more than what you're putting through now. Just by putting a little bit of effort in. And it might cost a little bit more with your accountant because the accounts are far more detailed. But it's probably worth it in the end, in my opinion. So I think that's where the issue lays. It's not the program itself, it's a disclosure of the program.
Yeah. Which is, it could be innocent or it could be deliberate.
I don't think it was deliberate. Yeah, I don't think it was deliberate. I think it was just like I have no idea what I'm doing. I'm just selling.
Yeah.
I think that's what it was. And now that we've got our hands on that information, sort of like, okay, cool, we need to capitalize.
So you're saying if you get presented the financials, you see it in front of you, you're like, okay, that's the liabilities, these are the assets, this is the cash in the bank, this is the car or whatever it's owned by the business. And you get those financials and you do your valuation and you're like, yep, bada bing, bada boom, that's fair enough. There's a liability on there. But if someone excludes that, that's the problem. You're immediately on the back foot.
Well, absolutely, because sort of like, well, why? Why would you disclose it? Why would you wait for us to agree on a purchase price? Then tell me about it, because I think it does affect it.
Yeah, it also goes to like the vendors or the sellers, like I guess honesty and like I guess them being forthright with you.
Yeah, well, at least it came up now. I'm not sure if the question was asked or how it came up, but it did come up, which is sort of good. But at the same time, sort of like, cool, would have been great to know during all the questions we asked. So
if I was trying to sell a business, I'm not, but if I was trying to sell a business, say, I don't know, say like I'm thinking like
I'll buy it.
So things are looking pretty good right now. But I'm kind of like ready to transition out of the business and blah, 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 blah. So we're in November 2023, and I'm thinking, well, I need to get all the financials in shape, like Daniel's telling me to. Would you be aiming for like this time next year, 2025, like to clean the financials out, to enhance operations, to minimize costs? Or do buyers, in your opinion, like in private markets, when they buy a business, are they looking for like 2 or 3 years of accounts to be consistent?
Yeah,
Like,
we look for a couple of years. We look at a couple of years, but it's weighted heavier to the current performance,
yeah,
right? So we look at the prior years, but if we see like major differences, it's sort of warrants a question. If we see great growth, it's a good thing,
yeah,
right? But we need to know how it came about, where it came from, what the risks are. Is it a volatile business? Is it, one that can do 5 million in 1 year, 1 million the next, 10
yeah.
million the one after, and then back down to maybe 2 million? That's a very volatile business. I personally wouldn't be going into a business like that, regardless of the good, sort of call it the good cycles that there might be there. So I think from like, if you're wanting to sell, the longer the better, in my opinion. So if like even from the start, like if your goal initially when you're setting up is to sell, I would be structuring with an exit plan and doing things in order to increase value at any point in time, and constantly have the accounts ready to sell.
It's interesting because like in public markets, like anyone that's like investing in shares or whatever will know things like dividend yield or price earnings ratio. These are like ratios of like the yearly profit to the share
Mhm.
price and whatever. And correct me if I'm wrong, but like in private markets and a lot of the businesses that you work with, I imagine a lot of them don't use those metrics. They would, maybe they do, but they might use like turnover metrics or like what's the industry standard for this type of business.
They generally look at sort of return on investment and return on equity ratios more than anything else, because the key here is to know sort of what return you can make if you were to buy a business of, call it 100,000. We need to know how long it'll take to make that money back.
And that's like what you would call, sorry to get geeky for anyone, but like owner
Yeah.
earnings, kind of like the cash flow that goes back to the ultimate owner.
Yeah. So we'll do a bit of a sort of calculation in the back end. We'd probably work out what's called future maintainable earnings, which is why we're looking at multiple years. So we sort of average sort of owner earnings over, call it maybe 3 to 5 years. The reason I say 3 to 5 years is because we look for trends. So if we see there was a major growth at year 4, it's a bit irrelevant to reduce the future earnings by the prior years when we know that there's been things taken to grow the business. So we'll do it over 3 years. But if we see the business has been averaging a similar turnover and performance, major staff changes haven't, like it looks like the same business has been operating with very little growth over the 5 years, we'll average it over the 5 years. So we work out roughly what the owner takings are on average. And that's our main sort of figure, and that's how we sort of determine how long will it actually take to return your investment to you.
That's a lot better than some of the kind of strategies I've seen for people with these businesses. Sometimes like in service-based businesses, I know it can be like what they call the book, like the book of
The book
clients.
value, yeah,
Yeah.
that's different. That's recurring income. It's very, unless you're in the professional services game, a lot of the time, you're not really building recurring fixed income, if
Yeah.
that makes sense. Like as accountants, a lot of our pricing is subscription based pricing. You tend to see that you don't change accountants very often. Some people
Yeah.
do because they're not really happy, and I'm all for that. I think you need to find the right people to deal with. But once you find someone you're happy with, it's very difficult, even if you were to make some mistakes, even if service was to drop off, if something was to go down, you generally don't leave. You don't see a big sort of transition of clients.
Yeah, you got
So
high
like it's
retention rates.
yeah, so it's fair to assume that the book value is a fair representation of, call it the business. Then you go for a few key ratios, call it like your labor ratio. Roughly the percentage of turnover goes towards labor and some OpEx. And
So you're saying like, wait, let me just clear something up for people. A lot of people that
yes,
hear you say book value in financial worlds, they would think that means like the price to book ratio, which is something that's on the financial statement. It's not that. What we're referring
no,
to is the value of the clients, like the what a an accountant's yearly income would be from those clients, kind of thing.
Yeah, so you'd calculate the annual value per client.
Yeah.
So when it's a recurring income, it's very easy to do. You just type in the last 12 months for each client, and that more or less spits out your book value.
And then you would compare that to because it's a service-based business. In this example, you would then compare that to the number of staff like the number of accountants in that firm that then you would have to buy and so on.
Yeah, so you'd look at sort of full-time equivalents, because obviously there's probably part-time staff here and there. So you look at full-time equivalents, then you go off the dollar value as well, working out what percentage of revenue does it take to actually complete the works. Type in some operational side of things, but when you buy a professional business, you don't really sort of take that into account because it can be profitable. It's service-based. We don't have cost of goods sold. We got labor.
Yeah. Okay. I feel like anyone that's listening to this that wants to buy a business is knowing what metrics matter and how they happen. Like, don't just take the financials and be like, oh, cool, that's good. Like, look at how those numbers end up on that page.
Have meetings. Talk with the previous owner. So the more you talk to them, the more you ask them questions, the more you'll generally find out. And the key is to ask questions, not to talk over them. Sometimes you're better off just staring them in the eye, make them nervous, and
give them some
blabber.
empty space. Yeah. There's nothing like a pause.
I do it all the time. Sometimes people probably think like, "Is this guy all right?"
is this a security guard?
Well, we did get called that once, didn't we?
Yeah.
What are these guys doing up here talking about accounting? They took our tickets at the door.
These are bouncers. Was that in Brisbane? Was that at the Brisbane event? Because you guys were doing the wristbands at the Brisbane event. I feel like it would have been.
No, we did the wristbands at the Sydney event.
Oh yeah, you did too.
We did it, but lucky we didn't talk at the Sydney one. I might have had an absolute anxiety attack with that many people in that crowd. I'm still surprised people listen to this, to be honest. Sometimes I just think we just talk.
That's why people love it. That's why we love it.
Yeah.
Okay, so if you're a seller, you want to know, like, if you're a buyer, you want to know those things in advance.
You want to know everything. You want to know too much. Yep. The more as a buyer, the more you know, the more prepared you are for the situation at hand.
But then conversely, if you're the seller, you want to know that that's your buyer. So you want to prep everything. So the financials are looking good. If it's a service-based business, they're going to be looking at, like in the case of buying an accounting firm, it'll be like, what's the average turnover per accountant? So look at your operating metrics, look at your efficiency per staff member, and prepare that and optimize that before the sale to maximize your sale price. Because I feel like a lot of people hear this and yeah, that sounds cool, what these guys are talking about. But it could be the difference between hundreds of thousands of dollars, or depending on the size of the business, millions of dollars.
Absolutely.
For operational tweaks that you can make now that pay off in 2 or 3 years. I remember there's the book Built to Sell, but I feel like one of the best things people can do is always prepare their business as if it was being sold.
Yeah, I agree. I completely agree with that.
It kind of it gives you a sense of like taking nothing for granted. That's what I find. It's like when you think like that, you think, well, why wouldn't I be doing this, first of all? But secondly, you think, that's going to maximize my profit. So that's a great thing. Of course I should do that, right? And a lot of people don't have the urgency to go and do that. So, yeah, Marco's just sent through a question. Marco, I feel like we're going to give Marco a season pass to the Australian Business Podcast because he's here every week. We love it, Marco. So thanks for the question.
We love the consistency.
Yeah. He's got a few gold stars for sure. Do you think using a broker to sell is better than selling directly, Daniel? That's for you, I reckon.
Yeah, that's a tough question. I think it's a good question. I don't think one is, call it maybe better. I think it's hard to say. I think different industries, there's different standards. The key positive with using a broker is the pool of people that are going to look at your ad to sell, right? So if you're looking to sell just to a large pool of people and you're looking at a quantity of people that want to potentially buy a business, then a broker's fantastic. They have the resources, they've got the contacts, they've got more or less even the guide on what to do to sell. So brokers are a really, really good asset. However, they're not foolproof. They do come with a cost. They're sometimes overly motivated to sell because that's where the commissions are coming from, meaning that you may not be getting the full potential value out of your business. Same as a real estate agent, right? Sometimes it's better to turn over a property than it is to get the maximum value of the property by simply waiting a little bit. It might be the wrong time of the market. There might be massive changes, compliance changes happening in an industry, and it's probably better off sometimes pushing it, sometimes waiting. It really depends on what's happening. And I don't know if the broker is always going to be the best sort of person to make that judgment, because the aim of the game is to sell as many businesses within the shortest period of time.
So basically, a key value is their ability to go to market and to bring in buyers that you would just never be able to find.
Correct. Or if you've never sold a business before and you haven't listened to us talk about, priming your business, getting your accounts together, making sure that there's, contingencies in place, you're making sure that there's any liabilities that aren't, call it, directly financial, meaning they don't show up through transactions on the bank account, that they're all being recorded properly, that everything's, primed. So even having like an organizational chart of, key employees, their roles, their divisions, like that's all really, really important. And actually structuring your business in a way that looks like a business, not just I have a couple employees, they come in every day and I point the finger and tell them what to do and that's it. We go home. Have an organizational chart, have key personnel, have people in there that can more or less run the business for you and create a business, not a job. Again, it goes back to that conversation as well, because all of a sudden, if you've got a business and not a part-time, but an owner can come in at a management level, not a technician level, all of a sudden your pool of buyers is increased. So there's all these sort of different factors. Brokers can help, and I have met some really, really good brokers, but like any industry, I've also met some really, really bad brokers.
I'm actually just thinking, if you heard me typing, it was because I was thinking we should do a like a pitch deck template for people, so you know what to put in a doc. So we can do that as well, because it could, it's seriously going to change people's lives if you get this right. That's the reason you get into business. Like if you don't want a huge payday at the end of starting a business, that's fine. You may not be motivated by money. You have to know what your exit strategy is.
Yep.
Then you may as well not run a business and you just go and get sweat equity working for someone else's business, in my opinion.
Yeah, well, I had a scenario. It was a business we purchased, and I reckon we paid 1/10 of what it was worth.
Wow.
To the point where I just said, just sign the deal. Don't worry about nothing. Just sign the deal. This is a multi-million-dollar company that's profitable, and I think we got it for like $100,000. And it was as soon as I saw the financials and I saw the asking price, I said, sign it now. Like, just get it done. And luckily we did, because he made his return back in like 6 months. It was unbelievable. And he came in at management level, and all we did was structural changes, organizational changes. The person had the key people there. He just hadn't highlighted it. That's all it was. We saw everything. So we did a quick due diligence as quickly as we could, make sure we ticked all the right boxes. There was no liabilities. We signed over the warranties to the previous owner. It was the perfect deal. And all because he wasn't primed to sell. And it was, to be fair, the person was put under a little bit of sort of pressure from like a health point of view. It was like, I need money like yesterday. Like, I just need to get out. This is how much I need, and I need to go. And we're like, we've got to capitalize on this. Take it.
Yeah.
Pay him, and let's take it and let's run with it. And it's, to put it this way, 80% of the purchase price was paid out as a director's fee that year, as a wage.
Shit.
In the first 12 months, he's made 80% back of his initial investment as a director's fee.
Has he been able to grow the business?
Yeah, straight away. Swapped out a few personnel, changed a few agreements, and straight away we've probably went up about 18% in profit, just in a few key changes. So, and that's what I'm saying. Like this, that was no broker, no nothing. Happened to be at the right at the right place at the right time with the right person. It was someone's friend, and just got the deal sorted.
Yeah,
my client won. The other guy lost, all simply because, one, he was put under time pressure. Two, he had no documents, nothing. He was not primed to sell in any way, shape, or form. There was no organizational charts. There was no processes. There was no structure. There was just a person telling people what to do. And although it may work short term in the business, it's not a sellable product at that point in time.
Yeah,
You haven't
so much
created a
key
business.
personal risk, right?
Yeah, and this person was like, "Oh, I can't run this business, without being there every day, even though I didn't do anything. It was just there."
Mm-hmm.
My client's come in who already has 2 other companies he works on. Goes, "I know exactly how to put this under management. Few key changes. Now the owner's sitting home going, kicking himself, saying, 'Oh, I could have done that.'"
Yeah. Hopefully he doesn't listen to this podcast.
I don't think he does. Yeah, no.
Okay. Yeah, maybe in the future. It keeps growing the way it is. Maybe you'll be listening then. Yeah, right. So I think if you're looking to sell a business, then one option is to identify other parties in your industry who may want to acquire your business for strategic reasons, because often strategic buyers pay more than Joe Blogs anyway. So,
yeah. Well, if you've got someone that's like in your area, in your industry, that's like you can see them absolutely pumping, just looking for growth. That's a great opportunity to even approach them if you're wanting to get out. So I can give you X amount of market share within this area, like that, ready to go quickly.
Yeah, just know your competitive, but like your bargaining position in that instance. I would say just maybe reach out to us before you do that sale, because there are things you can do before you go directly to the person to make them think that your business is absolutely wonderful before you've actually knocked on their door.
I think it comes back to everything we do is like having that plan, having the strategy readily available to get to the result. I think a lot of people miss that in business. Sort of like they just go with the motion of things just as things come up. There's no real goal or strategy.
Yeah.
So I think once you have that, once you're clear with your directive, everything becomes easier.
I think we've gone the longest we've ever gone without actually getting to the second question. So we should probably transition to that now.
Let's go. Let's answer that one.
Okay, Sir Ted the Third is what they've written in with, which is a fantastic name, by the way, Sir Ted the Third. You've said, as a complete green hat / beginner, I have no idea what I have no idea about. Do you know of any checklists or workflows for planning and creating my business? I thoroughly enjoy processes and inner workings. However, I am struggling to put together a plan to set a time frame for establishing my hobby into my legacy business. So I put a checklist together for beginner business owners. This is not necessarily for people that are looking to sell, which is what we're talking about. It is in the show notes already. You can just click and there's a link down the bottom for coaching. I'll bring it up on the screen for anyone watching. There is a link down the bottom for anyone who wants to get in contact with Growspace or myself. But basically, if you're starting a business, it's like, why are you doing it? Or even if you're running a business, why are you doing it? If you're not building it to sell it, then what are you building it for? Have you done the research of your industry? What are the admin or legal things you need to do? So like I heard of a business this week, great business idea, software business, or I should say like a platform software business. And they chose a name, registered it, and that old classic of you get the business name, you don't realize it. You think that protects you, it doesn't. And then it wasn't even an exact match for the name, but there was copyright held by a similar sounding name. So that was enough for the lawyers to say, uh-oh, this isn't going to work. Speaking to your accountant up front, and you could probably get a second opinion on that as well, to be honest. Speaking to anyone and getting a second opinion is probably a good idea. About the way you structure it, your licenses, doing all the research for your industry. In the document, I've said there's a checklist item for I've copied my competitors. And obviously the asterisk is don't just blatantly copy them, but there are very few points in business for originality. What I mean by that is like you can just go and look at 100 of the businesses in the market. If you're a plumbing business, what do they do well? Just take the best bits from the best of them and see if you can incorporate them. Look what software you need. Just did the episode on websites and how to build one. Upcoming webinar on that too, by the way. Link in the show notes. Do you need team members to start? Do you not? Are you buying a business? Have you done a competitor analysis? Designing these types of things? Equipment for physical businesses, all of the things we just spoke about, liabilities, tools and equipment, computers, offices, leases. There's so many things to know. So hopefully this little checklist helps people out if they're getting started. Daniel, we talked about optimizing a business just before. I guess anyone at any stage could do that, right? I'll turn the screen off now.
Yeah, definitely. I think start from the beginning. I say it's always easier. And I think, I can't remember, I'm pretty sure it's Alex Hormozy that said this, is right now you're the least busy you'll ever be.
Yeah, bloody oath.
So set your foundations right, set your processes into place as you go is always the best way to do it, because doing any change with 100 call it clients versus 1,000 clients, it's always easier at the 100. Even though you might be the busiest you are or have been, probably the busiest. The least busy you'll be moving forward, especially if growth is a strategy for you. So set your foundations, make sure it's correct, start building things out. And I'm going to tell you now, it's not going to be perfect from the start. It's not even going to be right. Your end product will look completely different. But what you have done is you've created a system where you're constantly tracking it and making those changes actively. And you sort of, it's your result will be a byproduct of that.
I you know that the old statistics around like 50% of businesses fail after 5 years, and people tend to over exaggerate that. But it's true, a lot of businesses do fail. I took that to mean when I was starting the company that I took that to mean the first thing I should do is figure out how not to fail. So like, how can I get through the first year? So a lot of people like will disagree with me on this, but having business plans that are like multi-year business plans, I did not have that. I had a vision of where I wanted to be, but I did not set down in year 2, I'm going to hire this person at this time, because I was like, I can barely predict what I'm going to eat for breakfast tomorrow, let alone what I'm going to do in like 14 months. But what I will do is I will research the industry better than anyone. I will make sure I know all of the key risks that could kill the business. So licensing, insurances, getting the right people on your team and your side, and spinning up a website. And how do you do that? Like the key things you needed to build a business. And I wanted to avoid the 3 big mistakes. I talk about that in the free course we've got, by the way. Plug there, because they were after resources. There is a free course. It's in the show notes. Check it out. Business course. I think it's 4,500 people, 5,000 in there now. Go and check it out. But anyway, I took that to mean that. And then as I've evolved in thinking about business, and it goes to exactly what you were saying, is simple is beautiful. Like, you don't need to over-engineer things. I over-engineered this legal structure, had like 3 companies for this and that and this and that.
Yeah.
Didn't need it. I had different software for this and that and this and that, thinking that would be perfect. Don't need it. Like if you even look at like, say, like people look at like Netflix and say, what an amazing technology company, total game changer, revolutionary. They didn't automate a lot of the things in the early days. The same with the Reed Hastings, LinkedIn. It was manual until they decided it was worth automating this thing.
Yeah.
And as you said, they were aware of the things that they had to do, but it was a trade-off of like, we can't do that right now, but we'll prepare for it in the future. And, so in the early days, yes, I agree with you 100%. And you'll have heaps of time, but at the same time, you don't know what you don't know. You also don't know if you'll have enough resources at that point in time. So just prepare as best you can. I think the way to prepare is to keep things simple.
Yeah.
And
yeah, I agree. And I think for any beginner looking to get into business, traction, jump on there. From a strategic and goal setting point of view, there's like their VTO system, so their vision traction organizer, which you can Google as well. It does come in sort of online platforms. That will help you, because I think it's easy for us to sort of turn around now that we've gone through the process and done it and say, just plan for it. But, how? Early on, I would have struggled as well if I hadn't got onto this book nice and early into our sort of business journey. Sorry, let me rephrase that. If Jordan hadn't got me onto this book early on, Mr. Reader goes, this is the one book you have to read. We cannot proceed unless you read this. So
3 years later, like, yeah.
Honestly, it probably took me way too long to read as well, but it was a good read. And I think everyone can get use out of it, especially early on, because it just creates almost like that an understanding of what we mean by plan for it or strategize for it. So we talk about it all the time, setting those call it the 12-month and 3-year goals or 5-year goals, and then having your rocks to track your progress. So these are things you put into place that you have to do in order to achieve your goals.
Mm.
That's as simple as you got to start. Obviously, do the main checklist. Like I saw your checklist, and those things are a must from a compliance point of view. But from running that business operationally, start there. Just set a few little targets. Like you said, you don't have to reinvent the wheel. Just start, test your concept, make some money, and then adjust as you go.
Like it. I think we've come away from this episode, we've come away with more things to do in the future for everyone that listens. Things like I committed us to this, a pitch deck. A lot of people, when they think of pitch deck, they think of venture capital, which is like, hey, look at this. I've got an app that's going to make people lose 40% of weight for the next 20 years.
Give me $40 million tomorrow.
yeah. And it's got no revenue. We haven't built it yet.
But your 40 million will help.
Actually, I've been through this process recently. It's like at the end of the financial year, I've just taken a look at our accounts and I'm thinking of like, I've got to do an update for our shareholders. And I'm just like, how much profit did we make this year? How much revenue? What have we focused on? But I want to condense that down into just a few pictures, and hand that to the shareholders so they know straight away. Like they don't need to read like 10 pages to understand what we're working on. They can see it visually. They can see our progress.
Yeah.
And it only needs to be like 4 or 5, I guess, charts and graphs that kind of encapsulate your business, and that allows you to just know to articulate what's important. There is a webinar coming up on how to build a website. I'm going to show you how to build a website. Alexander, who from Mid-Coast Yard Services, needs a website, Daniel. So I'm going to build a website with him end to end.
Oh, that's sick. I'm actually I'll tune into that one.
Even how to, like, set up the email addresses and stuff that you need if you're starting a business. We'll do that in under 60 minutes.
Yeah, because it's harder than you think. It's like, oh yeah, I'll just set up an email address. It is not that simple.
Yeah. So I'll show you exactly how to do it using the Google ecosystem, lightning fast website. And then we will be doing a bit of a summer series as well for folks. So if you are tuning in or you're going to start a business or you just want to refresh your knowledge of business, that will be coming up in January. We'll be doing a bit of a session there and it's going to be heaps of fun. Hopefully Jordan will be back with us and leading the charge there because he's the master in chief. And if you want to get in contact with Daniel and the team, if you're selling a business, buying a business, do it. Grey Space Advisory. There's a link in the show notes below the video if you're watching. Thanks, Marco, for rocking up live. As always, mate, we really appreciate it. If you haven't subscribed yet, subscribe wherever you get your podcasts. Daniel, absolute pleasure, mate. Thanks for taking time out of your day.